What did we learn on Friday from Powell?
Oh, well, I mean, I think we learned the obvious, that the Fed is ready to pivot and is so ready to start cutting interest rates next month. I think probably the bigger takeaway in a way was that the Fed is quite worried, or at least paying quite a lot of attention now to the labor market. You know, Powell speaking quite strongly on the fact that the Fed would not allow a further decline in the conditions in the labor market from here. So that makes that payrolls number that we're going to have in a few weeks' time all that much more important when people try to gauge whether the Fed will go 25 or 50 with the first cut. I think most of the expectation before Jackson Hole was probably coming back towards 25, and we saw a little bit more of the likelihood of a 50 basis point cut priced back in, and so we have those lower yields. You know, I think the other market takeaway is, well, hey, we're going to have lower interest rates, we're going to have a weaker dollar, we're going to be able to carry on pushing those equities higher, all other things being equal as a result.
Well, speaking of that weaker dollar, Paul, I'm looking at a 111 handle on euro dollar, almost 112. What cracks that winning streak?
Yeah, the euro is certainly performing strongly at the moment. We will get some inflation figures coming up this week. We should confirm that that's continuing to weaken as well. And September, you know, doesn't look like a surefire cut for the ECB, although some of the policymakers around about Jackson Hole from the ECB were talking about there being like the little question to ask, you know, off we go with another cut. There's still some caution among the Governing Council, particularly among the hawks, so it's not nailed on that that's going to happen. In the meantime, I guess you have to keep an eye on the euro area economy as well, which, although it is been showing a reasonable amount of resilience so far, people are a little bit concerned about as well. So those things, and then, you know, on the flip side, how long can the dollar keep on weakening? I think if you believe that the Fed is starting on this cutting cycle, then that's going to continue to weigh.
And Paul, in the context of what you're saying, then, what do you think is more important this week, that European inflation data or the Nvidia earnings?
Yeah, well, I think I sound like a broken record because every 3 months I come on and do one of these hits. We talk about Nvidia earnings. I say, how can it possibly beat those lofty expectations? Pretty much every time it does match the lofty expectations or even exceed them. So I don't even know if you can call the expectations lofty anymore. You know, we know that the AI story is great, that momentum continues, and that is going to inform at least that big kind of block within the S&P and US stocks and global stocks as well that is AI weighting now. And people will be paying quite a lot of attention to it to see how long that theme and that narrative can continue. But whether, you know, Nvidia is the right one to carry on watching, given that it sort of has this almost monopolistic kind of hold over the market, or whether you want to think about what else is going to come up with it and whether they can be supported too, might be a question to ask when we get through those earnings reports later this week.